The managing partner at Ansid Capital. Anurag, thank you very much for joining us this evening on ET Now.
Sumita, I can hear you.
Anurag, can you hear me? Okay,
yes,
wonderful.
Yes, I can.
So, Anurag, I want to understand what's the improved outlook on the back of the IMF has spoken about domestic demand, but what are the other key factors?
So, Sumita, we need to look at this projection in some context. Look, the earlier projection was 2.9. Now it has been raised to 3.1. But and that's the global growth outlook, right? And Indian growth outlook has been, of course, raised by 10 basis points accordingly. But I think part of this confidence comes from the general cool down of inflation within Eurozone and US without really hampering the larger economic activity. Look, the concern last year was that as the Federal Reserve tries to raise rates and control inflation, and same with European Central Bank, so also with Japan, that the global economy will face a massive slowdown. And when that happens, of course, the growth rates will suffer. That has been the bit of a change in picture this year, at least this year. That it might be that the economies globally in US, Eurozone, and Japan are more resilient than they appeared, and they might be able to sustain higher interest rates. So that has largely been the basis of this revision. But Sumita, I would also, to our listeners, also caution a bit, because IMF is usually a little optimistic to start with. They are not the they're not the place from where the bad news really starts, or they are not in the business of projecting the bad news. They're saying we are projecting this assuming the conditions of today continue. And that's where, their projections come from, because they projected Indian growth about 8.1% for, right in March 2022. And that didn't turn out that way. So they revised the forecast downwards.
All right. So, Anurag, let me toss it over to Ashesha for now, because metal stocks have been losing their spark this year. A new development has come into play, and that is a stimulus that China has just announced. How will that affect the metal stocks? But first, let's take a look at the report on how the metals index has underperformed in this year. Ashesha joins us with more. Ashesha, over to you.
Well, yes, metal stocks are in action today. In fact, Nifty Metal Index is one of the top sectoral gainers in today's trading session. And remember, Nifty Metal Index has significantly underperformed the benchmark indices on a year-to-date basis. At a time when Nifty 50 has gained nearly 9%, Nifty Metal Index has declined nearly 2.5 to 3%, which shows the kind of underperformance metal stocks have done on a year-to-date basis. Adani Enterprises, Vedanta, NMDC, Hindalco have been the top losers on the Nifty Metal Index on a year-to-date basis. One of the primary reasons is, of course, the fall in commodity prices. Aluminium, zinc and lead prices have fallen anywhere between 7 to 19% on a year-on-year basis. Ferrous-based steel, for instance, has been spared. Steel prices have risen nearly 10% on a year-to-date basis. Now, of course, there's talks of stimulus from the Chinese government, which could probably spur growth, and that is the reason we are seeing some reversal as far as these metal stocks are concerned. In fact, Chinese government has signaled more support for the country's troubled housing market, and analysts say that they expect further relaxation with respect to home purchase restrictions. They also say that this kind of policy course was long overdue, and more confidence of gradual and consumer-led economic recovery could be on the cards. So yes, Chinese policy support is what is spurring growth and spurring traction as far as these metal stocks are concerned today.
Thanks, Ashesha, for bringing in that report. Anurag, over to you. Now, talking about China, the IMF data is also just coming in right after a stimulus was announced by China after, it reported a weak set of numbers for its economy just last week. So recovery in China doesn't seem to be in line with expectations. And, that's what the market is sort of factoring in as well. What do you make of the stimulus that has been given, to the industry? Does it seem like the bazooka stimulus that the industry at large was expecting? What do you make of that?
Sumita, 2 points. You raise a very valid question. And as I see, because these numbers have just come out and I'm looking at them as well, the IMF projects that the Chinese economy will grow at 5.2% in 23. and about 4.5% in 24. Now, that's a bit of an optimistic assumption. And now I see why the numbers would have got revised to a slightly higher level. I think the world would have reasonable doubts, at least in the investment community. The doubt is pretty strong that Chinese might not be able to grow more than 5%. And IMF says 5.2%. I think it goes back to our point that they start with the optimistic news and they try and price in as the conditions happen. So I think that's broadly one point. The other point is well known, Sumita, because about 50% of, you call it copper, aluminum, steel, cement, everything, almost 50% of, that's a ballpark, huh? Half of all the global consumption comes, goes to China. So these metals really, are a resultant of how the Chinese economy will do. So, and the world has known for some time now that the Chinese real estate is losing its sheen. And they need to provide stimulus to revive it. And, it's imminent. However, what's not so clear is that what will be the impact of that stimulus, right? Because, we should not forget that this is not 2008. China is now a good $15-16 trillion economy, depends on the numbers that you believe in. So at that scale, what kind of a stimulus can they provide and what will be the impact on this large size of an economy? That will remain to be seen. And that's why it is so hard to project anything about China. Really, I understand. But I can certainly say these numbers are pretty optimistic, at least for China, Sumita.
Right. So these numbers look pretty optimistic on China. That's that's the opinion that you hold, Anurag. In fact, this was the essentially the aim of the government as well, to sort of bring in some optimism to spur investment in sectors in the industry in China. But would you be able to comment on the growth picture for perhaps the second half, and perhaps what sort of supportive policies that the markets and the overall industry is penciling in?
About China, Sumita, or global growth, you're saying?
Yes, China.
On China? Yeah, Sumita, it is so hard to project anything on China because the economy is so opaque. Just about a couple of months back, they've also taken away the access of where the investors like us used to monitor the macro data of China and how the consumption data is changing. And on that basis, the world used to project some numbers. But now all that data will be coming vetted through a government website and not through independent sources. So now and probably that was the idea, right? That we can't, now if we can't estimate consumption for the last quarter for China, how do we, even say, what will be the numbers or whether these numbers are right or wrong? So I think it's a bit opaque, but I think suffice to say, Sumita, that it will be very tough to grow at 5% at this scale. The numbers are, quoted between 3 to 4%. And that's the best case scenario that the China might grow. But then, hey, it is China, it can always surprise. It can, it's a reasonably closed ecosystem. And we might get a surprise. But investor community is not banking on a 5% growth from China this year.
Rightly said, the investor community is not banking on a 5% growth for China. But going back to the global economy, that seems to gradually recover from the pandemic. The IMF's positive forecast for growth this year. The war is sort of getting over, but yet still many challenges remain and cloud the horizon. It's perhaps too early to sort of celebrate. So what are the risks involved here then?
So Sumita, the risks are very clear, and in fact they are pretty strong and stark. One is the biggest is the inflation risk. Look across, after 30, 40 years, the Western world, and now even Japan is facing inflation, right? And Japan, probably they needed it. And that was the recipe. But rest of the economies, I think inflation, the way it is there, it is strong, it is persistent. The central banks will have to stay at higher rates. Western economies, and European economies and US in particular, have been used to 0% rates for more than 2 decades now. And I think that's going to change. Nobody knows really how this higher for longer narrative will play out. So that is a one big risk, that in an effort to curb inflation, central banks might have to, take a slightly lower compromise on growth. And that's very imminent, right? So that is one perspective. Sumita, the other is bear in mind that the global demographics is also of late changing. And, if you look at the global growth in a very longer perspective, 90s were the global economy in the 90s, despite, all said and done, grew at just 3%. In 2000s, there was a bit of a spurt moment between 2002 and 2007, where the global economy was at 4%. But for the entire decade between 2001 and 2011, it was just about 3.1%. Back to the last decade, between 2011 and 2021, and I'm counting 21 because 20 was COVID, so let's just take the decade from there. The global growth again was 3%. So I think in a world where the demographics, the earning members, the retirees are growing, that the earning members are growing only in China and India, and actually now not even in China, it is very hard to comprehend a global growth which will be more than 2.5 or 2.7 for the decade, I'm saying. Look, even IMF is saying 3% for this year, but I'm sure if they were to project this growth till 2031, it will be somewhere in the range of 2.5%. See, because all the bigger engines have really, the 2001 to 2010, even the last decade was saved only because of China. Otherwise, the global growth would have already shrunk to 2.5. So I think those are the risks, Sumita. And third is not to mention the geopolitics risk, right? There is always Taiwan, and there is always Russia. And there is always this de-globalization which is happening, which is that everybody wants to have friend-shoring or near-shoring or de-risked. So, the other risk is that we are peak globalization already, and the international trade may not be as, smooth as it has been for the last 30 years. And we see impact of the, all those things on food prices, metal prices, and everything. So the risks are pretty high,
Absolutely.
Sumita, I think. And, India will have to look more inwards towards getting that growth rather than any export-led growth.
Right, so that's the word coming in from Anurag. Anurag, thank you very much for joining us this evening on Rush Hour and sharing your perspectives on what will really spur the Indian economy, the global economy. Anurag obviously rightly says that even though IMF has turned slightly positive, but concerns regarding inflation and geopolitics do remain.